Shares of Vishal Mega Mart fell 7% after nearly 14% equity changed hands in multiple block deals. Promoter Samyat Services is likely the seller, offloading stake at a nearly 10% discount.
Bihar has passed a bill to regulate microfinance lenders, capping borrowers to 2 MFIs and mandating a state registration to curb coercive recoveries. While exposure is high for players like Utkarsh and Ujjivan Small Finance Bank, brokerages see no systematic banking risk.
The government will today roll out a new GDP base year of 2022-23, replacing the 2011-12 to better reflect the post-GST, post-pandemic economy. The revised series increases services weight, uses GST and MCA data, and may alter deficit and debt ratios.
Auto sales are expected to post double-digit growth in February, led by two-wheelers and steady PV demand. Maruti Suzuki India, Tata Motors and Mahindra & Mahindra may see healthy annual gains, while tractor growth could soften amid crop price pressures.
Shares of Dixon Tech rose 3% after reports the government may extend incentives for smartphone makers beyond the PLI scheme. Meanwhile, Tejas Network surged again on its 5G radio partnership with NEC Corporation.
Shares of Gaudium IVF listed at 83 rupees on both the bourses, which is a 5% premium to its 79 rupees issue price, marking a modest debut. Remember, the 165 crore IPO was subscribed 7 times.
Canadian PM Mark Carney begins his India visit with a proposed $2.5 billion uranium deal and talks on trade, critical minerals, defense and tech. Meetings with PM Modi could formally launch FTA negotiations, signaling a reset in India-Canada ties.
Hello and welcome. You're watching Buy Now, Sell Now. I'm with you, Kavita Thapliyal, and this is a show where we answer your stock-specific queries. But today on the show, let's talk about something very important. That's right. We are talking about the latest, which is Bihar passes microfinance regulation bill. Now, as far as this bill is concerned, it regulates microfinance's small loan providers. State approval before dispersal is mandatory, and a lot of other nitty-gritties that are coming across in this particular bill. But then let's understand and let's see how the sector and the stakeholders are taking this decision. Mr. Alok Mishra, CEO and Director, Microfinance Industry Network, has joined us. Hi, Alok, and morning. Welcome to the show. All right, a very important development now, since it has started with Bihar now, which accounts for roughly 15 to 16% of the sector loan book. Is this a trigger for more states to follow? And also your first comment, Alok, on this bill.
Yeah, thank you, and thank you for having me. Let me clarify a few things on the bill. Yesterday, it was passed in the Assembly. Today is stated for the Legislative Council, and post that, it will be notified. So we still do not have a copy of the bill, the official copy of the bill. But what we have, and I would like to draw your attention to, I think there is a lot of news going around, but there is a specific clause. I still repeat that I still don't have official copy, but whatever the copy is being circulated, it says that in section 2 and 2, I think it is the section 2 of section 2, subsection 2 of section 2, which clearly says that the RBI regulated entity, which is banks and NBFCs, including HFCs, are excluded from the provisions of this act, like registration and all that. And I also see that there are a lot of measures on borrower protection, responsible lending. And those things, as you all know, under RBI's responsible business conduct guidelines, our own industry code of conduct and guardrails are even or on the same lines to protect the borrowers. And to answer your other part of the question, where you said whether other states will follow or not, I think the last year Karnataka did, Tamil Nadu did, and in all cases, it is the regulated entities of Reserve Bank of India, which are banks and NBFCs, were exempted from the provisions of it. And the aim was of all these states was basically to protect the borrowers from illegal lenders who are not registered and they try to exploit the borrowers.
Right. Hi, so this is Ankita also joining in. So, talk to us about the impact that you might see on the listed lending space. What about those companies that are already listed and the impact coming in on the margins and so on?
Well, as I said, that as our current reading is that the broad reading is that the listed the companies, which will of course be RBI regulated, which all our members also, which are not listed or also RBI regulated, are exempt from it. So I think if there is a long-term measure in terms of margin or in other things, I don't see any impact. But there can be momentary sentimental issue. But I think as the dust will settle down, things will clear out. We will also take a campaign. We will also engage constructively with the government of Bihar to clarify a few things as and when the notification comes. And we will also take a media publicity or outreach activity, not media, I would say, to borrowers to clarify that what is the intent of the government and how the regulated entities operate. So we are not seeing much of we can say, a real impact on the listed companies or other RBI regulated entities as of now.
All right, Alok, also, just wanted to understand what does this mean for over, I mean, are we looking at something like an overlending or a overlever aging scenario over here?
No, I don't understand. Whether it has nothing to do with because over leveraging or over indebtedness, those are already dealt by two strict norms. One is RBI's repayment obligation norms for microfinance lenders. On top of that, there is MFIN guardrails, which talks about that there should not be more than three lenders. The overall loan outstanding to a household with 3 lakh annual income should not be 2 lakh. So all these are more than enough safeguards, and 98% of the sector operates within those guardrails. So there is no concern on the over leveraging and over indebtedness part of it.
Right. Mr. Misra, also could this cap slow down credit growth in Bihar, especially for the lenders with high exposure? How will that impact the growth?
No, which cap? Sorry, I could not get you.
The credit growth. Will
No,
it
you
bring
said
down the credit growth?
no. You said due to a certain cap. Which cap?
Could this cap slow down this? I think there is some cap that's been put on the lending, or will that slow down the credit growth in Bihar? Especially for the lenders that have high exposure.
Well, our caps, which we industry adopted it way back in November 24, the guardrails have enough caps in that, and that has brought down the portfolio a little bit in Bihar, like all India last year, but not much impact do I see. And those caps, our caps, industry caps, RBI caps on repayment obligations are already there for the sector. Sector is operating with that.
Also, we just wanted to understand your perspective as far as the revival cycle is concerned in this particular space. Do you think it's a little lagged now? And if it is, what are the big challenges and what does it actually mean?
No, pricing, matlab, are you talking in the context of the bill or general scenario?
We are just trying to understand where are we at the revival cycle in MFI space.
Okay.
Yeah,
Okay.
yeah.
Sorry. I didn't get it.
That's okay.
So as I said, what we see, if we see a last numbers on credit quality we have is of January. Those numbers say that the credit quality is already coming back to normal, or you can say it has come back to normal. New loans which were given last year or till January are performing very well. And based on that, the only constraint for things to be normal, two things have to be normal. One is the credit quality, and the other is the liquidity, the funding flow to the borrowers, first to the lenders and then to the borrowers. So one part of the leg is already okay. The second part of the leg, which is funding, is yet to start. We are seeing sporadic start of lending to the big lenders, but small and medium are still to benefit from it. We have been requesting the government of India for a guarantee scheme to break this funding winter cycle. If this happens very soon, because the credit quality is already, as I said, was become normal. Along with that, if the guarantee scheme also comes in of the government to give confidence to wholesale lenders, liquidity will also start. And then if both these conditions are met together, I think by Q1 end, the sector will come back to normalcy in both sides.
All right, Mr. Misra, on that note, thank you so much for taking the time out and weighing in on what is going to be the likely impact on the MFI sector in the state of Bihar and so on. But with that, it's time for us to slip into a short break. Don't go anywhere, because after the break, we're coming back and we're getting all your stock-specific questions answered on the other side, so stay tuned.
Hi, welcome back. You're watching Buy Now, Sell Now, and we are answering your stock-specific queries. Both of our guests are live with us, Kunal Bothra and G. Chokalingam, who are there live. And you can also send across your questions on the WhatsApp number that's flashing on top of the screen. Hi, welcome to the show. And our viewer is also connected on the phone line with us, Mr. Gopi. Hi, sir. Good morning. You're calling from?
Yeah, good morning, madam. I'm calling from Tiruchirappalli.
All right. So you can ask your question.
I am holding Gopal Snacks 136 shares at 336. Now current market price is 297, madam.
Okay, yeah.
Should I hold the stock for the short term?
All right. So when you bought it, the intention was short term or long term?
Short term, madam.
It was a short term thing. All right. Kunal, can you help?
Yeah, so good morning. I think it's a decent chart for Gopal Snacks, even though the last, I think, 5-6 months, as you can see, that the stock has gone through a correction of sorts. But I would still sense that the trend for the stock is on the positive side. I'll suggest a hold on the stock price, not to add at current levels, but wait for a point where there is at least a 2-month breakout high. So that level, I think, is around 315, 320 mark for Gopal Snacks. Above those levels is where you can average. But as of now, it's a stock which is going through a mild corrective phase. Looks okay on the chart. I would suggest a hold.
All right. So that's the view coming in. But let's move on to the next question now that's coming in from on WhatsApp. Let's talk about this stock. This one's coming from Krishna from Hyderabad. He says, can you provide a view on Sagility here? Why is it declining? He's bought 2,000 shares at a buying price of 48 rupees. Should he hold or exit? Kunal, at this point, what should be his strategy with Sagility? Can it go down further? And he wants to know whether he should hold it or exit.
See, I think you should look to exit the stock price because this is a very sharp correction for the stock price. And I think in the last 1 year, approximately of the price history for Sagility, the stock initially made multiple attempts towards breaking 54 mark. And after maybe testing this levels 5-6 times in the last 1 year, the stock has reversed quite sharply. The concern for the stock price is not just this 20% plus correction the stock has seen from those 54 levels, but the manner in which the stock has corrected in a very sharp manner. And generally, we've seen that such kind of a sharp 1 month selling for the stock price, there is at least a further residual sell-off which happens for another 2-3 months for the stock. I'll suggest an exit. 40 I think is a crucial support. The stock has broken below these levels, and my assumption is that if today the stock on monthly closing basis falls below the 40 mark, it would probably confirm a near-term further correction for itself. So I'll suggest an exit.
All right, that's a take for Sagility. But then we're also joined by Vinay Kembhavi from Pune. Vinay, hi, good morning. How are you?
Good morning. Thank you.
How is the Friday treating you today?
Very well, but I am more worried on the stocks which I hold, and I have certain advice to be taken from the experts.
Sure, please ask away.
Yeah. See, I have 1,000 shares of L&T at 32.24. I am a long-term investor. So I want to know what is the target for next 1 to 3 years. That is number one question.
Okay.
Number two question is I have 15 to 20 lakhs worth of money to invest in semiconductor, data center, AI and defense stocks.
Okay.
So which are the best among each one of these sectors? That is what I would like to. Again, I am an investor. So basically it is for investment.
Investor and quite a learned one because you've identified the right themes for the future. So congratulations over there. And Chokalingam sir, I'll come to you. First, let's take L&T.
In fact, L&T I consider as one of the most attractive large cap stocks. Its exposure to technology in terms of profit contribution is only around 30%. So 2/3 of the profits are coming from other than technology segments. That gives a lot of confidence at this juncture. And second, it is going very aggressive. Whatever he has mentioned, semiconductor, data center, in all areas, it is going quite aggressive. And I'm sure L&T will build a big business, not only in semiconductor and data center, and also in electronic component manufacturing. So that's a combination of new age theme and traditional engineering business. So I like most. So otherwise, in defense, we have a buy recommendation on HAL. So these are the two stocks we have a formally buy recommendation, and I am also personally very optimistic on those two stocks.
Kunal, quickly, what's going to be your take and also the lump sum investment that he wants to do?
See, I think you just need to hold on to the investments over here, HL, etc. I'll suggest that maybe I think there could be an opportunity in the next 1 month or so that you might even look to average from the investment capital you're looking out for. It's difficult to try and decipher the trends exactly. But if I have to take a bet, I would still look at SBI as one of the stronger bets. Union Bank from the PSU banking names. L&T are still holding on to that stock price. Maybe add on to a few of the pharma names like Lupin, etc. I think that could be better bet or better strategy at current points of time.
All right, we'll quickly get other questions answered, but first up. Welcome back. You tune into Buy Now Sell Now, where we get all your stock-specific queries answered. Now the number is flashing on top of the screen. Please send in your questions. And now we're joined by a caller, Rajiv Kashyap, who's calling us from Gurgaon. Hi, Rajiv. Good morning. Thank you so much for joining us today. Tell us what's your question.
Yeah, hi, good morning. So I have ITC Hotels for almost a year now at 256, and it's about 30% loss for me. Should I hold or add more or just book losses?
Okay.
And another follow-on question quickly on DLF. It's nearing 52-week lows. Good time to buy?
Kunal, ITC Hotels, he's clearly sitting at a huge loss. What should he do now? And for DLF, is it a good time to get in after the correction?
So I think for both of the stocks, ITC Hotels specifically, I think at this 175.80 mark, it's a good point where I would suggest that you can look to average out, because it looks like that the stock is going into a time-wise consolidation over here. So the major price correction, which was there for ITC Hotels, I think the last 1 year from mid of 2025, I think that seems to be now behind. There could be a point where the stock would consolidate over here for current levels. DLF also, on the other hand, I would believe that at current levels of 600 is a good buy territory for long-term investors.
All right. Is there anything else you want to ask our experts?
I mean, if possible, REITs, is that a good investment? Embassy REITs or something similar? I mean, and if any advice on that?
Shokalingam sir, any view?
Definitely, but the perspective of the investment differs. REITs is not going to create any massive capital gain. Those who are, liking sort of fixed income instruments, definitely they can consider. There are some REITs which give you even double-digit return. So definitely one can consider that to, diversify the asset allocation.
Dividend income, can one consider it for that particular aspect, because diversification is needed in your portfolio? Can that be the purpose? Shokalingam sir?
Yeah, definitely. I mean, considering the market in the short term, we are seeing a lot of pressure. So instead of parking, everything in fixed income securities and bonds, one can consider it, because some REITs give you even 10-11% return. So definitely one can consider them. It is not a substitute for equity. That one has to keep in mind.
All right. Thank you so much for answering that question. I hope, Rajiv, your questions were answered. But let's move on to a question that's coming in on WhatsApp. This is Deepak, who's writing in from Mumbai. He says he wants to know the entry levels for Persistent System and Newgen and also Zomato, and also wants a long-term fundamental view on these. Kunal, quickly, first I'll come to you. Again, somebody has written about the IT space, and they want to know the entry levels for Persistent System and Newgen. Is this the right time? And Zomato as well. Is this the right time to enter these three counters?
So I think price-wise, yes, maybe this could be a good level where you can look to start initiating. Persistent was a stock which was about the 500 kind of a territory just about a few months back, and now it's fallen down to sub 5,000 levels. Price-wise, yes, you may look to start at current levels, but my only concern is that maybe the actual bottom for these stocks would take some bit of more time. So persistent that sub 5,000 mark, I would probably sense that maybe there could be a chance the stock may correct towards 4,500 before it actually shows signs of maybe some sort of a bottoming out on the longer term basis. So if you want to buy, you start to look at buying, say, 1/3 of your expected quantity or 1/4 of your expected quantity at current levels, and then look to have a staggered approach of adding on dips. Eternal also, on the other hand, the stock, I think at 250 levels, looks to be coming back into a deep oversold territory. But again, with the kind of sell-off the stock has shown post the results and the exit of Mr. Dipinder Goyal. So I think post that we've seen the stock behaving a little bit more in an erratic fashion. So there could be a scope where the stock may fall a little bit more further from current levels. So buy and dips is what I would suggest for all three of the names, and that too in a very staggered quantity. But you can start maybe looking at maybe 1/3 or 1/4 of your investment at current levels, and then look at sizable corrections to add further.
Right. Okay. So these are the entry levels for all the three counters. But another word on the fundamental views for the next, say, 2 years, Mr. Chokalingam, what would be your view on Persistent System, Newgen, and Zomato?
Yeah. After going through these proceedings of AA conference, I may be wrong, but I am really nervous on IT services companies. I am slowly getting convinced that the structural shift is really going to create a lot of threat to IT service companies. So I would like to avoid accelerating investment in IT services. Yes, Persistent is a good quality stock. If somebody has a different view that AI is not going to impact, then Persistent is better than Newgen, because Newgen historically last 15-20 years, I do not understand why the stock rises 3-4 times and falls 60-70%. So that extreme volatility gives me nervousness. So I would avoid Newgen. Quality-wise, Persistent is better. As far as Eternal is concerned, tactically, yes, because it is part of Nifty index and also, it's a beaten down recently. So tactically, there could be some short-term upside, but medium to long-term, I am not overly bullish on Eternal because, I consider this as like a mini, mining company with a labor-intensive business model with a combination of digital. That doesn't give me tremendous confidence, particularly after the recent labor code changes. So therefore, yes, short-term tactical opportunity could be there in Eternal.
All right, so that's a short-term and long-term view. But then let's move on. We have Mr. Siva Reddy from Guntur on the phone line with us. Mr. Reddy, hi, good morning. How are you doing today?
Good morning, madam. Very fine.
All right, so you can ask.
I'm a big fan of ET now.
Thank you.
Since last 2 years, I'm seeing daily.
Lovely. Thank you so
following
much.
Mr. Konal and Mr. Chokalingam.
You can ask your questions, Mr. Reddy.
I want this gold ETF, madam. Whether to invest in gold ETF or silver ETF, fresh buys.
Okay, see, for the purpose of diversification, you should be having commodities in your portfolio, but then that also depends. So far, have you invested in any ETFs?
No, madam. I own shares, madam. All banking shares, PSU banks, private banks, and Reliance, like that only, and AMC companies.
All right.
With the advices of both our stars there.
For investment, you should be having 10 to 15% of these commodities, precious commodities in your portfolio. And, you're planning to do a lump sum or an SIP?
SIP, madam.
All right. I think that should not be
5 lakhs I got cash. I want to stop for now the share and come to this gold ETF or silver ETF.
All right. So 5 lakhs, you want to stagger the investment in these commodities?
Yeah. Yes, madam.
Sure. I don't think that should be a problem. And but out of gold or silver, Mr. Chokalingam, I know this is a commodities question, but then see, we need these diversifications in a portfolio. Either one can buy like a multi-asset allocation fund, which automatically gives you the benefit and an exposure in gold and silver. And if one wants to stagger investments out of gold or silver, can one choose both right now, or you think gold is a safer bet looking at the volatility?
Than silver, because the central banks buy a lot of quantity of gold. Their purchase of silver is minimal. And second perspective to this gold investment is that perennially gold is going to go up only. If you are talking about beyond anything 1-2 years, it's going to be, because the price in India is determined on the basis of landed cost of gold, and therefore it depends upon the rupee exchange rate, and which is always depreciating over last 5 decades. So it may come under continued pressure. So therefore, gold outlook remains very good for medium to long term. But from investment perspective, if you ask me in the short term, I am little jittery, because the gold has given a long-term return of 6%, but last 1 year it has more than doubled. So maybe as and when gold corrects 5-10%, that can be considered for short to medium term, that is within 1 year perspective. But otherwise, if somebody is having a view beyond 2-3 years, yes, it's always better to do SIP in gold for long term.
All right, Mr. Reddy, you know what? We will again take your question in our show, The Money Show, where we talk about investments. And, as Mr. Chokalingam also mentioned, that a time horizon needs to be really long, so 5 to 10 years, definitely for diversification, you should be having in your portfolio. But then, so far, that's the take for you. And you can stagger the amount. And we will be taking your question again next week on The Money Show at 5 p.m. on ET Now. But then, thank you so much for your question. Anything else on stocks that you want to ask?
I'm this one's madam. I have invested in HDFC Asset Management and ICICI. Which is better? I want to know.
This is for short term?
No, long term only.
Long term only?
I am profit in ICICI and loss in HDFC.
Yeah.
MC.
All right. What's the short term trend, Kunal?
See, I think for both, I would suggest a hold, even though I think you are maybe having a profit in one of them, and the other one is not doing very well for itself. But I would still believe that the larger trend is positive for both of these names. Yes, the markets are going through a corrective phase. Maybe this correction could extend if in case the news flow deteriorates. But I think in an overall context, I would still believe that both these stocks are looking very strong.
All right, let's move on to the next caller who's joining us now. Murli from Andhra Pradesh. Hi, good morning, Murli. Tell us what's your question.
Yeah, good morning. Actually, I am having Catholic Syrian Bank, 220 shares at the rate of 525. View is 1 month. Can I hold or sell it?
Okay, so he's talking about CSB Bank. Kunal, should he hold it or should he sell it as of now? So he is holding 144 shares. And let's see the buying price. The buying price is 550. So he's clearly sitting at a lot of loss. What should he do? It's a 1 month view, Kunal.
Yeah, in fact, in the last 2 months, the stock has seen a very aggressive kind of a sell-off of sorts. I think from those 500 plus levels to now sub 400 mark. And it's been a very sharp correction. Prior to that, I think it's been one of the better performing mid-cap end of the banking names. So I'm not sure why the stock has cracked so hard. There has to be some sort of a news flow and event attached to the stock price. But I would suggest that I think maybe on closer to a rally for the stock price around the 400 kind of levels, 400, 420 range, I think is a band where I would suggest an exit into the stock. So not an exit at current levels, because it looks like the stock is into an oversold territory in terms of indicators, short-term indicators. Use bounce into the stock price as a point where you can look to exit. Just as I mentioned, in the range of 400 to 420 would be a better range for you to exit or reduce your holdings on CSB Bank.
All right, Mr. Murli, that's a take coming in for CSB Bank. But then with that, it's time for a short break. Post that, we are also answering your stock-specific questions. Just in case you haven't yet sent your questions to that, the number is flashing on the screen. See you after the break. Welcome back. You're watching Buy Now, Sell Now, and we're answering your stock-specific queries. And G. Chokalingam and Kunal Bochra are guests on the show live. Let's take a WhatsApp question. This is coming from Mr. V. Ravi and this is on Thomas Cook. He's a senior citizen from Chennai, accumulated 1,800 shares of Thomas Cook at an average price of 149. He wants to know what to do now, buy more or bring the cost price down, or wait and watch and book losses, or maybe just invest anywhere else. He needs a technical as well as a fundamental view. Kunal, let's start with you.
So I'll now suggest an averaging out for Thomas Cook at current levels. The stock is still showing signs of weakness. And maybe I think over the next in a couple of months, if in case the selling gets arrested at this level of 100 levels plus minus 5-10% for the stock price, then I think you may probably want to consider averaging out your investments. But at least as of now, with confirmations on the weekly, on the monthly, and even on the quarterly charts being seen for Thomas Cook of a breakdown, I would suggest not to average out further.
Chokalingam sir, what's going to be your fundamental take?
Certainly, it's a good to hold. There are 2-3 interesting data points. Of course, the stock has crashed a lot and valuation is very comfortable. Trailing P is around 19. But interestingly, debt has been under control and there is a lot of free cash. So it's a net cash company. And secondly, one should not forget the fact that in the recent past, it has taken over, asset-rich resorts. So if you look at fixed assets, nearly 3,000 crore on, entered as a book value of the fixed assets. And we know last 3-4 years, these fixed assets, particularly the land bank values, have gone up substantially. So it's a very deep value stock, and also the travel business is going to be perennially a growth story. So I would suggest definitely hold, and in case it corrects further significantly, this is a good buy as well.
All right, let's move on to the final question for the day. We have a caller joining us, Komil from Bangalore, who's joining us. Hi, good morning, Komil. Thank you for joining us today. Tell us what's your question.
Yes. Hello.
Komil, yes, we can hear you. Tell us what's your question.
My question is on MobiKwik. I have purchased 600 shares of MobiKwik at rupees 209 each. So should I hold for 2 years or so?
MobiKwik, Mr. Chokalingam, tell us this new kid on the block. For the next 2 years, what do you pencil in?
I am not very confident of this digital business, so I would request you to excuse me. I am not able to give any optimistic view on the stock.
All right, Kunal, do you have anything to add here?
See, nothing major, because I think the chart history in the last 2 years is very limited. And the last 2 years, the stock has shown massive correction from post its listing or opening gains. So I think post that, the stock has been one-way sliding down. Don't track the stock, but I think looking at the short-term aspect, I wouldn't recommend any kind of an averaging out. Maybe use bounce backs as a point where you can do to exit.
All right, that's the view coming in. Komil, is there anything else you want to ask?
Should I invest in IDBI Bank for 2 years at rupees 113 or 114 each?
All right, I'm not sure. Chokalingam, sir, that's that going to be your pick in the space?
Yeah, it's trading slightly rich value, but its asset quality is too good. Definitely, I believe in 2-year time frame, it can give a decent return because industry tailwinds are also favorable.
Kunal, what's going to be your take?
Yeah, so I'll suggest that maybe I think as a better bet, I would suggest either SBI or Canara Bank. They are much better bets, better placed at current juncture.
All right, I hope your question was answered. Thank you so much for joining us. But we have another caller who's on the phone line now. Gangadhar, who's calling us from Bengaluru. Gangadhar, tell us what's your question here?
Yeah, good morning, ma'am. I'm calling from Bangalore. Okay, my query is related to REC shares. I brought it at 373, around 40,000 shares, ma'am. So I bought it in July 2025. Should I sell now or hold them in for this due to this light of merger with PFC? Will I get any short-term benefits?
Yeah. Okay. What's your holding period? What's your time horizon?
I purchased in July 2025.
No. For how long are you willing to hold it?
In one or 2 months.
1 or 2 months. Okay, so it's a short-term view, Kunal. REC, he's clearly sitting at a loss. He wants to know 1 or 2 month perspective. Is there going to be any short-term upside as a result of the PFC-REC merger? What do you see?
See, at least it doesn't look like as of now, because when I look at the time post the announcement of the REC and PFC potential merger, post that PFC's moved up higher and REC has underperformed or has gone through a further correction. So relative scale wise also, I think it looks like that REC would underperform. My suggestion would be that maybe just wait for a point where, if in case in the next couple of weeks there is any kind of a bounce back, if it comes closer to your cost price, 370, 375, that could be a point where I would suggest to exit.
All right. So that's the particular take coming in. But any other question that you want to ask? Mr. Gangadhar?
Shall I
Sure.
now?
Yeah. Ask away. What's your question?
Yeah. Shall I sell it now, or shall I wait for another 1 month time?
All right. So, Kunal?
Yeah, this is for REC, right?
REC, right? Yeah. Mr. Gangadhar?
Okay. I am holding 40,000 shares. Okay.
Yeah. So that was just answered. Any other question apart from this?
No, ma'am. I don't have any questions apart from this.
All the best. Let's move on and let's take the last question. This is from Mumbai, and this is Deepak, who wants to know levels to enter Persistent System, Newgen and Zomato. Mr. Chokalingam?
Yes, Persistent is a good quality stock. Newgen I would avoid. Zomato, maybe for a tactical reason, it's quite possible to bounce 10-15% purely from the short-term perspective. One can consider.
So that was a last question that we could have taken. We completely timed out on this edition of Buy Now Sell Now. Kunal and Mr. Chokalingam, thank you so much for taking the time out, joining us and answering all the questions. But with that, it's a wrap on this edition. Kavita and I will take your leave. Thank you so much for tuning in.